Hello traders, and welcome back to a new episode. In today's video, I'm going to be showing you guys a full breakdown of how you could take this GBP/USD trade using the smart money concept. We're going to be starting from the higher time frame to the lower time frame entry. I'm also going to show you where you could put your stop loss and your take profits. This video contains a lot of valuable information, so make sure you don't miss out and make sure you write down information to use it later on. Without wasting any minute, let's go dive in. So here we are on the 4-hour time frame. All right, this is GBP/USD. First, what we need is we're gonna analyze the market from here. Let's say the market was breaking structures to the upside, creating higher highs, higher lows. So we have the price here breaking this structure here, creating higher highs, higher lows. We have another break of a structure here, giving us another higher high, breaking this structure to the upside. All right, so now what we notice is over here there's a empty supply zone that was never mitigated. Okay, that was never mitigated. Mitigation is when the price leaves an area and comes back to retest it. Okay, so the banks, they started taking trades from here, breaking this structure, but they never came back to refill the rest of their orders. So what happens is this area is waiting for us, okay, later on down the road. So this is where we're going with this. Okay, you also see the market just breaking the structure to the upside, creating higher highs, higher lows, and this is our last higher high and our last higher low. Okay, so after that, what we have is a change of character. Once this higher low is violated, the market reversed and started creating lower highs, lower lows. Okay, breaking structures to the downside. Okay, we have a change of character here. After that, the market started breaking structures to the downside. All right, giving us lower highs, lower lows, which is the opposite of an uptrend market. So we have the price here making lower highs, lower lows, creating supply zones and breaking structures to the downside. Lastly, we have our last lower low gets broken to the downside. All right, so what's going on here is market is breaking structures, testing supply zones. This is our supply zone here. This is another supply zone. Market made a lower low, breaking this structure, created another supply zone here. Now price broke this structure again, creating another lower low, coming back to this supply zone to retest. Okay, so after that we have a break of structure, creating another lower low, and then once the price came back all the way over here, before the price came back all the way over here, we have equal lows. So watch out for this. Okay, we have this low and this low being equal. So what happens here is a lot of traders are been buying from here and putting their stop losses down here. Okay, so people are buying from here and putting their stop loss over here. Therefore, the big players, all the big institutions, they know this is an obvious area where a lot of retail traders are going to be buying and putting their stop loss down here. So what do they do then? Remember, on this higher time frame, they bought from here, broke the structure, but they never came back to mitigate this demand zone. So what happens is they have a lot of orders sitting over here that needs to be refilled. So they started going up, you know, creating higher lows. So now they want to resume to their uptrend position and fill the rest of their orders that was left over here in this demand zone that was broken. So this is why you always have to have in mind and mark your higher time frame demand zones and your supply zones. Okay, so that you know any place that's not mitigated or tested after a break of structure could be a potential reversal later on down the road. Okay, so the price started, you know, breaking structure to the downside and then taking out this liquidity zone here. Okay, after taking out these liquidities, it came back to retest the higher time frame demand zone. So once it came back to the demand zone, what we do now is we're gonna go to the lower time frame. We're gonna go to the lower time frame. So now let's just use the replay bar and then go to the 15-minute time frame. So what we're looking for around here is we're looking for some type of change of character, and then price giving us a reversal for a confirmation. And this is why you should be very patient when you're trading this type of markets, because if you don't have no patience and you don't have no confirmations before you take any trade, you'll be losing a lot of money, you'll be very frustrated, and you'll be quitting later on down the road. So now let's go to the 15-minute time frame, since the market is revisiting our higher time frame demand zone. We don't see any reversal yet, so what we do is we're gonna continue going down to the low time frame, like the 5 minutes. Okay, what we're looking for is a change of character. Okay, we're looking for a lower high on the lower time frame, gets broken, price coming back to retest it, and then giving us that confirmation to continue to the upside. Okay, so now let's replay. We still don't have any change yet. Market is still going down. Okay, price still going down, creating lower highs, lower lows, breaking structures to the downside. Okay, another break of structure here to the downside. We still continuously breaking to the downside, and we are trading within the higher time frame demand zone. So what we're looking for is a change of character. So now we're gonna turn our candlestick chart, since this is very clustered and very ranging over here. So what we do is we're gonna turn our candlestick into a line chart so that we can see everything clearly. So now we're gonna replay it. Remember, we're looking for a change of character. Here we are. We have our last lower high. Led to lower low, gets broken to the upside. So now what we do is we're gonna mark our change of character on the lower time frame, like the 5 minutes or the 15 minutes. So we have our change of character here. Okay, we have a change of character here. Price going beyond the lower high that led to the lower low here. So now what we do is we're gonna initiate our trade around this mini demand zone. Okay, so we're gonna take our first entry right here. Let's place this. Our first trade is gonna be placed over here. The entry is gonna be like we have the change of character. Price comes back to mitigate this demand zone that's not touched yet, which is called, so this area is called an imbalance. Okay, let me just do this real quick. So there's an imbalance that's left out between this candle and this candle. So between this candle and this candle, there's this empty space called fair value gap or imbalance. So the price gave us a change of character, breaking this recent lower high around the demand zone and leaving an empty area that needs to be mitigated. Okay, so now we wait for the price to come back over here, giving us that retest on this demand zone, which is an imbalance. And now we place our first trade. Okay, once we place our first trade, stop loss is gonna go down. Stop loss is gonna be around this low here, which is our last low before this lower high create this low low. So our stop loss is gonna be going over here. Okay, so now we're gonna go to the lower time frame, higher time frame, and target this first lower high. Okay, this first lower high. So what we're looking at is a stop loss of, we're looking for the price giving us a stop loss of 10 pips and a profit of 79, which is 7 to 6 reward ratio, which is really huge. Okay, so now we target our first structure, first high time frame structure, which is on the 4-hour time frame. There, the structure here, that this lower high that led to lower low. So this is the area that we're going to be targeting. Now let me go back to the lower time frame and monitor this trade. Okay, we have our entry initiated. Okay, all right, our entry initiated. Price going up. hitting our first stop loss, first take profit, and now we're going to continually target the higher time frame structure. So now we have a second structure here. So once we take profit, we're going to continue holding a portion of that trade to aim for the higher time frame structures. Okay, let me go back to the 5-minute time frame real quick. Continue playing this trade. There you are. Okay, in total you have a risk of 10 pips and a reward of 186 pips, which is 17 to 7 reward ratio. So basically this is one of the advantages of knowing how to trade with the smart money concept, which is you use a minimum stop loss and target the higher time frame structures. So basically you have nothing to lose but to gain a lot of money using this strategy. But it needs a lot of training. So make sure you train and you use this, concept on your chart. Train your eyes, pick one pair and use this strategy to train your eyes. Make sure you mark your charts all the time. Make sure you look for the demand zones and the supply zones and the liquidities, and also go into the lower time frame, looking for the change of character, putting your stop loss below that demand zone that created the change of character, and then targeting the higher time frame structures. All right, if you gained any knowledge from this video, please go ahead and subscribe. And if you have any other questions or if you have any suggestion, please put it in the comment section. I'm going to be bringing up a lot of videos. We don't keep a secret over here in this channel. We give it 100%. We're loyal. Okay, so let's go roll and make money, traders. Okay, thank you very much again. I'm really appreciative for your time coming over here, visiting the channel. Thank you again. Have a wonderful trading year. Peace out.